Hey there friends, welcome back to episode 27 of that live portfolio update where we're growing 50k into $1 million. Look, I'm going to apologize now. We are a little bit late on getting this one up. I'm currently traveling interstate, so it's a little bit all over the shop. I'm using someone else's mic, my camera's not right, but at the end of the day, I just want to get this content to you guys. So if your beer's up, hang on Pete, I know you only just got your beer in there, but guys, go and grab your beers. Sit back, relax, let's work through this, bear with me, but come on guys, without further ado, let's just jump into it. Alright, benchmark time. So how did XJO fare this week? Well, that's 2 in a row, up 1.7% for the Monday to Friday trading week. It was good to see the steady climb after that big dip on Monday Arvo. So how did our stocks do this week? Well, finally outperforming our friend XJO, but only just. We're up 2.26% for the trading week, with no dividends declared. Capral, the myth, the legend, again with a back-to-back near 8% gain. A little more to go though to get up to last month's close of $9.29, but we're on the right way. Aurelia up 4%, even with that 10% drop through the week from a bad announcement. More on this later. Champion being a champion, bringing us a modest 4.7%. The only real worry is Red River, giving us a Red River of capital loss, down another 4.2%. Unfortunately, this guy might be a sell this week, unless he recovers on Monday. Hashtag watch this space. So here's all last week's buys, holds and sells. The ones that changed are as follows and why. Surprise, no changes again. It's nice, but for peace of mind, Capral is getting close to a buy and Red River is getting close to a hold. Well, it's close to a 10% real one for us due to our entry point, but you can't win them all. It's a new month at the tail end of this week, so we might need some new undies guys, but please remember, do your own research. Alright, so since inception, we have a pure capital gain of positive 0.01%. Look guys, apart from a positive from COVID, I'm happy with any positive on this sheet. Portfolio still has a dividend return of 5.23%. This gives us a total return of positive 5.24%. So our concerns have been coming into fruition. River might have to go this week, as we said in the last slide, because of that 10% loss, unless they recover on Monday. It's sad, but rules are rules, guys. Alright guys, everybody's favorite part. So today's nugget section is going to be on Aurelia Metals. We'll do the normal thing here. We'll have an overview of the company, the management, some graphs, and some numbers. Alright, let's jump into it. So the overview. So basically in a nutshell, from the Aurelia website, they are an Australian mining and exploration company with a strategic land holding and 3 operating gold mines in New South Wales. They have the Peak and the Hera mines, which are located in the Cobar Basin in western New South Wales, and the Dargis mine, which is located in southeastern New South Wales near Canberra. This one actually gave them a slight downgrade last week, but we'll have more on this later. Aurelia's vision is to be a mining business recognised for creating value through their people and gold metal assets using the 4 pillars, being integrity, certainty, courage and performance. In FY21, they produced 103,634 ounces of gold at a group all-in sustaining cost of $1,337 per ounce. The cool thing here is the Peak and Hera mines actually get profits back when refining the materials, pulling zinc, lead and copper from the waste. That's what they mean by having gold and base metal assets in their portfolio, as stated earlier. At time of recording on Monday 28th, Aurelia has a market cap of 600 million with an ADT of nearly 1.7 billion. I thought it was interesting to note that their average daily trade is nearly 3 times their actual total market cap. Currently, Aurelia is trading on a PE multiple of 13.5 times earnings. Alright, the management. Let's start with Mr. Daniel Clifford. Come on up, mate. So Dan joined Aurelia back in November 2019 as MD and CEO. He has over 25 years of experience across the industry, with most recent position held being the MD and CEO of Stanmore Coal, where he held the position for about 3 years. He contributed to the significant growth and profitability of the operation, which also reflected in the share price over the period. Hopefully he will do the same for us. Prior to this, he also held various other CEO and senior technical and operational positions. Currently, Dan has a modest 0.25% stake in the company worth $1.5 million. It would be nice to see him hold a bit more as the CEO, but who are we to tell him how to live his life? Next up, let's do the chairman. Come on up please, Mr. Peter Botten. So Pete is a pretty experienced executive who was appointed the chairman in September 2021, which is pretty fresh for Aurelia. Prior to this, he was the MD of Oil Search Limited for over 25 years before he retired, which is an impressive tenure. He also has extensive worldwide experience in the oil and gas and resources industry, having held many senior positions. Currently, he has his fingers in AGL as a non-executive chairman and Karoon Energy as a non-executive director. It's good to be retired, hey Pete? Unfortunately, Pete has zero stake in the company at this time of recording. Alright, some numbers again. Now I enjoyed the holistic view last week where we just discussed some assumptions from a couple of random lines. Let me know if you want a more deep dive, but let's just jump in. We'll just do the P&L today, but we'll pull it apart. Okay, check out the top line, operating revenue. I love how you can see every year since 15, they have been consistently increasing year on year. That gives you the assumption that management are doing the right thing by increasing either productivity in existing mines or bringing on new mines to increase revenue. But that doesn't mean much to us as shareholders unless it gets back to us down here in NPAT. So let's check out EBITDA. Now as value investors, we don't really look too much into this line as we just want to see the cash baby. And for those that don't know, EBITDA is earnings before interest, tax, depreciation, and amortization. Basically, it's the income purely generated from the operations revenue minus the operations expense. Now you can see a bit of a story. So in 2015, they started making decent revenue, but at a massive cost. They only realized some EBITDA from 2016 onwards. It was bumpy, but nonetheless, it was positive. Now running down, these are the other things that come out of our shareholder money. We have depreciation and amortization, which gives us our EBIT figures. Then we take out the interest revenue and expenses, which gives us our earnings before tax. Now remember, if you don't make money, you don't pay tax. So you can see we really only started seeing earnings trickle down from 2018 onwards. Now this is probably because of all the startup costs when the company was getting rolling, with their huge prior year expenses rolling into current year profits. So let's check out the line we really care about. From 16 on, you can see some net profit after tax hitting the bottom line. A real big figure in 2018. I'll have to go and check out that year's annual report as it is quite impressive from the top all the way to the bottom. It could be from great economics around resource prices or just a stellar year from the company. If you know what it was, let us know in the comments below. Alright, I'll stop babbling about this P&L. Let's jump into some graphs. We'll start with the 5-year monthly. Man, it's ugly, hey. It was in a rocky downfall from March 19 to March 20, losing 75% of its share price. But if you remember back to the P&L, we actually did see around a 65% reduction in NPAT from the stellar 99 mil in June 2018 to 36 mil in June 2019. So obviously something was happening around there. I checked the gold futures, but that has been on a tear since September 18. Meh, this is what makes it so fun to go back and research what actually makes these big companies tick. Alright, let's check out the 6-month daily to see our entry and what's been happening. So boom, AMI 6-month daily. You can see where the green circle is, that was our entry point. If you can remember back on the 2nd of December at 42 cents a share. Now the orange line is our 10% Rule 1 stop loss, which was set at around 37.5 cents. But luckily for us, we have been in a bottom left, top right kind of trajectory. Well, a bloody bumpy one, but nonetheless it's there. Unfortunately, we have hit some headwinds last week. After we had a 12% increase on Monday, Tuesday, most of it has dropped off due to an update of the Dargis life of mine. Basically, there will be a 60 to 80 million non-cash impairment charge to be recorded in the FY22 full year results. And the market threw a tantrum when that came out. They wiped that amount off the market cap itself in the next 2 days. Rude, right? Alright, that's enough AMI. It's time to wrap this up. Oh yeah, baby, payday has arrived. Remember that massive divvy from Capral? Well, it finally hit. 50 cents a share at 1,260 shares gives us 630 bucks. Also, it was fully franked, which is beautiful. The payout ratio is down around 30%, which means they are still holding some of that cash for growth, which is good. Then over to Michael Hill. 3.5 cents per share at 95.10 shares gives us 332 bucks. No franking credits attached though. Payout ratio is at about 46%, All in all though, nearly 1k has hit our bank, which is beautiful. Boom, that time of the month again. Another 3750 has hit the bank this week as per our trading plan. Honestly guys, doing this auto transfer each month really helps the portfolio. It's like the one consistent thing we can control, and it really helps that snowball grow momentum. Alright, so our cash account is now at 8345 bucks. With our 8345 in cash, plus our 76742 in stocks, takes us to an overall value of 85,087 bucks, which is about a positive 8.14% total portfolio gain from last week. Yeah, I know, that is a crazy high amount. Half of it was from the contributions, but as the portfolio grows, that cash injection will diminish over time. But right now, I'm gonna flaunt those gains while I can. And an added bonus, as per the revised plan, we'll enter a new stock worth 5k next week. I can't wait, as buying has been so quiet lately. Well, I hope you got through your beer and enjoyed that episode. Apologies for it being a bit late and a bit all over the place, but interstate travel gets the best of us at times. Unfortunately, next week will be the same, but nonetheless, I hope you guys have a lovely week, and I'll catch you next week. See you guys.